All right, good evening, everyone. This is Ajit Mishra, and welcome to the weekly webinar of Week Ahead with Religare Technicals. We talk about markets, how the markets performed during the week, followed by the performance of the key indices and the top stock from the Nifty 50 basket, both on positive and negative side, followed by our view on the key indices, both Nifty and the banking index. And lastly, we talk about certain stocks wherein we have positive formation or negative formation. We conclude the presentation with a small poll to understand, what do you like about the webinar, or what all topics that you would like to hear from us in the coming webinars. So let's get started. And a quick disclaimer. First, that the idea behind this presentation is to share the insight. It's not a trading or an investment recommendation. So before making any decision based on the information shared, please take help from your financial advisor. Now talking about the key indices first, both Sensex and Nifty shed over 1%, and a breather previous week, 0.5% kind of a gain, again a sharp cut. It's a very unique thing that in the last 2 weeks, last week also, it was Friday sessions rebound which held the index to end in the green, and today also that a sharp cut in the index today means on Friday as a result in index ending on a weak note, or with a cut of over 1% on a week-on-week basis. So the last 2 weeks we are seeing this kind of a trend, wherein during the week we see consolidation. But on the final sessions, we are seeing a decisive or directional trend. In line with the index, you'll see majority of the sectors, inclined towards the negative sides. So when it comes to weightage, banking, financials, and IT, obviously the top three losers. Then reality and media also added to that list. Only the energy pack managed to end with the gain thanks to ONGC, wherein we have seen decent recovery. Then select stock from the other, energy related stocks, wherein we have seen traction. Talking about stock specific Nifty 50 performance, you'll see name across sectors. So first on the list, NTPC, which gained roughly around 5%. Then we have two stocks from the auto basket, Bajaj Auto and Tata Motors, which ended in the green. Then we have Adani Ports and Power Grid also, which participated in the move. At the same time, we have like mostly stock from the banking and financial basket, which ended lower. So you can see the right hand side of the table, wherein Bajaj Finance, ICICI Bank, SBI Life, Kotak Bank. So from banking and financial baskets, the stock traded under pressure, and then profit taking extended in M&M, and that's the reason that why we are seeing this stock in this list. So overall, it was negative week for the market overall, because majority of the sectors and the broader indices also fell in line. Now, what to expect? Okay. What to expect in the index? So first we'll talk about Nifty. So this is the daily graph. So usually we talk about using the weekly graph. Today, for a special reason that I'm showing you this daily graph to make it more clear that what is going on in the market. So you can see this, two lines. So these two lines, market have been trading within these two lines. So it's a declining channel as per the technical term. Wherein after making a high close to around 18,887 roughly in the month of November 2022, we are seeing gradual profit taking in the market, and the highs are lowers, means every time markets make an attempt to recover, it fails to cross the previous swing high, and when it comes to the decline, it's making a newer lows. So this declining channel is intact because of late Nifty made an attempt. In fact, last week we discussed about the same, that 17,800 to 18,000 could be the zone where Nifty might test, following this strong close on the Friday. So initially, yes, we attempted that swing wherein Nifty came closer to 17,800 mark, but it couldn't surpass. And in the last two trading sessions, we saw that it drifted sharply lower. So this downtrend, this declining trend is intact, and below this, previous swing low close to around 17,255 was the recent low that we have made before making this recovery. So below that mark, obviously, this area, which is closer to around 17,020-50 area, would be the next major support as per the declining channel. So the tone is negative, and we are seeing that Nifty is forming lower highs. At the same time, the global markets, which we closely track, the US indices, we are not seeing any respite on the global front as well. So mostly indications are pointing towards the negative tone to continue. So as we have said, 17,200 to 17,000 would be the area of support, and any bounce towards 17,600 would be the first area of resistance, wherein we may again see the selling pressure emerging, and then major around 17,800 for the next week. So it's clear that we are anticipating negative tone to continue in the market. Any breather towards 17,600 might attract selling pressure again. Now, when it comes to banking index, it's slightly different as in it's comparatively stronger. Though, if you see that this is also a daily graph, the banking index is also witnessing, correction. But from the last, few months, few weeks, we are seeing that, the banking index is forming higher lows. So earlier it was close to around 39,400, which we have tested during the budget. Then in the recent swing low, it was close to around 39,600. So though we are not making higher highs, means we are still not seeing a reversal in the banking index, but yes, it's comparatively stronger. At the same time, it's holding above 40,000 marks. So if you remember, those who have joined us last week, we've discussed about that 40,000 is a make or break level. So any level which, in case if you just want to remember one, area wherein below which the tone would change is 40,000 mark. That is the, as of now, the 200 days of exponential moving average where Nifty is currently hovering. So though, in the past also we have breached that mark, but usually we, regain or reclaim this level very quickly. So in the past also, if you see this red line, Nifty penetrated for a brief but ended above the same. Similar scenario wherein for last 2-3 trading sessions, it was hovering around that mark, but quickly resumed the recovery phase. Again, we are inching closer to that mark. So 40,000 break might change the tone or the relative strength that we are seeing in the market, in the banking space, particularly at present. And that might also align with the overall trend that we are seeing in the Nifty index. So as of now, it looks comparatively better. So as long as we are seeing this level maintaining like 40,000 mark, utilize this dip to accumulate quality stock from the private banking space. But since we are seeing erratic swings, accumulate them gradually, not at the one go. So stock like Axis, ICICI, SDFC, these are the names which are comparatively stronger. Now, after the mixed trend that we are seeing in Nifty, it's a clear downtrend. In banking, we still have supports to go, where one should look at when it comes to this stock specific approach. So first stock that comes to our list is Balrampur Chini. So earlier we had multiple queries during the webinar that when we are anticipating a recovery in the sugar space. So you can see that this is among the top performing name when it comes to the sugar pack. So in the corrective phase also, there was hardly any major correction, in comparison to what we have seen in the other sugar counter. So the stock, after retracing from 520 levels, it spent roughly around 7-8 months during this consolidation phase, and finally witnessing a recovery or a rebound with very strong candle. This is the weekly candle that we have for Balrampur Chini, and the volumes were also strong. So both indications are pointing towards this positive tone to continue in the coming week also. So it might take a breather in case if the negativity continues in the market, is what the indications are. But comparatively, it is likely to trade strong. And this zone closer to around like 410 420 area, above which we expect fresh momentum also. So one can look at this stock from the buying perspective. Another stock that we like, which after a very long consolidation, we have seen a breakout, is Petronet. So Petronet was anyways like, hovering in a very broader range, close to around 250 to, 180 from last several months. Off late, the range was slightly narrower, and off late, we have seen a breakout from that range also. So you can see that the stock has been hovering in 225 to 190 zone, and finally last week we have seen a breakout. So it's a low beta counter in a market like this, wherein we are seeing that pressure across the board. It's prudent that one should stick with this name like Petronet, Balrampur, when we have more confirmation, means they are more decisive, they spend more time during the consolidation, and then they are seeing a breakout. So it's not a stock which are trading at the record highs. The idea behind is that stocks which have seen decent consolidation and the risk to reward is also favorable. So apart from Balrampur Chini, Petronet is something that one can look at. Now coming to the stocks which are looking weak to us. So first stock on the list, Lal Path Lab, a fresh breakdown. So anyways, you can see that these multiple lines, which we call a trend line, that clearly shows the trend. Then, the stock after this gradual decline was hovering in a narrow band. And this week we have seen a fresh breakdown. Means, despite the oversold position, we are not seeing any respite. And, eventually we may see this level of previous swing low breaking in the coming week. So one can look at Lal Path Lab for shorting positions in case of any bounce. Lastly on the list, from the metal space, VEDL. So metal as a sector, we are still seeing mixed trend, wherein certain stocks, they are still holding strong. They are hovering in a range, stock like Jindal Steel, JSW Steel. But rest of the counters, they are either witnessing profit taking or consolidating in a range. So VEDL, after almost retesting the previous swing highs, is gradually drifting lower. And chart pattern indicates, because we have multiple averages, short-term averages breakdown, plus if you draw a trend line, that trend line has also witnessed a breakdown. So all the factors are pointing towards the negative tone to continue in VEDL as well. So just to sum it up, when it comes to Nifty, the tone looks negative. Any bounce towards 17,600 may result in fresh selling pressure, and 17,200 to 17,100, 17,000 is the area basically what we are eyeing on the downside. Banking is still comparatively stronger, but below 40,000, the tone would again, change, and it will resume the overall trend that we are seeing in Nifty. But as of now, it's comparatively stronger. Prefer private banks on dips. When it comes to stocks, we talked about Balrampur Chini and Petronet on the positive side, and Lal Path Lab and VEDL on the negative side. So yeah, that is all from the presentation part. And now we'll do a quick poll. Yeah, so please fill this feedback poll, and then we can start with the Q&A session. In case you have any question, once you are done with the feedback, you can start posting your question in the Q&A tab, using that Q&A tab. Please quickly fill this feedback, and then you can start posting a question using that Q&A tab. All right, so let's get started. Okay, the first question is from Mr. Bhargav on will the market will bounce back as today's sell-off is because of the SVB crisis in the US. So, Mr. Bhargav, that is what we have shared, that we are largely mirroring the global markets. And, if you remember that last time when we discussed about the US market, we talked about certain levels. So as a trader, I usually prefer what is going on means the what part. Why is something that one should not bother in case if you have a short-term trading perspective. So 32,500 to 34,500 is what the broader range is when it comes to the key indices of the US market, the Dow Jones Industrial Average. So currently we are again in line with our markets have reached closer to the lower band of that range, which is closer to around 32,500. In case if fails to hold that level, then you expect this decline to continue in the US market, and that might reflect in our market as well. So as of now, 32,500 is something that one should keep a close eye on. Forget about what's news and other things. When it comes to trading, it's very important that you should have a stop losses in place. Don't try to preempt or means go into the mode wherein we look for confirmation and means anything which is in favor of our position. All right. So that we have already shared that market range 17,000 to 17,800. That's for the entire week, and intermediate is 17,200 to 17,600. Okay, next question on telecom sector. So telecom as a sector, it's witnessing mixed trends. So anyways, Idea is not at all participating. Bharti has been holding strong. So anytime when you look for any bet in the telecom space, Bharti is anytime better. And in fact, after this marginal dip, it looks set for a recovery again. So Bharti, one can continue to accumulate even during this corrective phase because the overall trend is positive. See, stock specific queries, please avoid anything related to any sector. We are happy to answer. So we talked about almost majority of the sector. Yes, one sector which this gentleman has asked about what we are anticipating in the pharma. So pharma is the one sector wherein we are not seeing any respite despite the oversold position. So if you exclude a couple of names like Dr. Reddy, where we are seeing a range basically, but majority of these stocks are gradually drifting lower, making either they are trading closer to the 52 weeks low or in fact to the new record lows as well. So in a scenario like this, one should definitely avoid pharma in case the view is short term, and people might have this perception when the market changes the tone from positive to negative. Usually the defensive comes into play, but this is not the case always, and at times we see that the selling pressure is continues across the sector. So yes, from the defensive basket, comparatively, we feel that FMCG stocks are comparatively better because we have already seen decent correction in HUL, Britannia. So in case if somebody is looking from that perspective, then look for FMCG counters instead of pharma. All right. Next question is on the infra space. So infra, anyways, means infra is combination of several subsectors. So be it metals, be it cement, capital goods. So here in capital goods is anyways holding strong. So L&T, ABB, Siemens, they are still holding strong. Then we have from the cement space certain stocks performing well, but majority are either witnessing consolidation or drifting lower. So apart from like Dalmia Bharat and Ultratech, which you've shared earlier also during the webinars, are the top two preferred names in case if the view is short term. Even from the medium term perspective, I feel that these are the top two performing names that one can look at. From the metal space, Jindal Steel, JSW Steel, these are the preferred names which are comparatively, showing resilience. They are trading closer to the record highs. The rest of these stocks are still like, witnessing mixed trend. In fact, we have shared BDL as a, candidate to look for shorting position, despite, some of these stocks are doing exceptionally well. So it's a more of like a mixed trend within the sector, and accordingly one should plan. Okay, so FMCG, anyways, we touched upon means selectively. Yes, we are seeing stocks like ITC, which has considerable weightage in index as well as in the FMCG basket also. Trading around the record highs. Then we have HUL, Britannia, wherein we have seen decent correction. Then we have Godrej Consumers also, wherein we are seeing recovery after the marginal retracement. So these are some of the names which one can look at to accumulate gradually in case if the market corrects further, because usually we see these stocks, witnessing breather or a recovery or a participation on the positive side when the market corrects. So these are some of the names which one can look at. All right. So next question on the IT space. So IT is largely trading in tandem with the global markets. So it's not that the other sectors are not behaving in the similar manner, but IT very closely track the Nasdaq Composite, and that is what we've shared earlier also. That this recovery of late, which we had in the IT majors, was largely due to the rebound in the Nasdaq Composite Index. So as of now, it looks comparatively okay. 29,500 is the level for the Nifty IT which one can look at. Below that, this recovery which we are seeing in the IT majors, that might fizzle out and the tone might shift again from sideways to negative from the present recovery phase. So 29,500 is the make or break level for the Nifty IT index. So agree, anyways, it is something which is related to FMCG space that we have already answered. Yeah, apart from that, stocks from the fertilizer space or tractor, they are largely trading in tandem with the trend. So we are not seeing any decisive trend when it comes to the agri-related stock as of now. In fact, M&M was among the top losers this week. So it's not that the trend has changed for the stock. It's just that we are seeing profit taking across sector despite being a strong fundamental backing. So as of now, from the agri related theme, I feel that mostly stocks are trading largely in tandem with the index. So yes, any dip, further dip in the M&M or stock like Chambal, Balrampur Chini, as we've shared, they are comparatively better structure on dips. All right, so yes, last important question on the energy basket. So basically, energy basket, as we have noticed, that was among the only gainer in the sectoral space. So we feel that stocks like Petronet, Power Grid, NTPC, Coal India, they are comparatively better structure. And even if the market corrects further, we feel that the decline might cap in this name like this. So yes, you can selectively look at these names for the buying position, but do maintain stop losses. So in a market like this, wherein we are seeing gradual, decline, a very, staggered manner recovery also, it's very important that one should maintain stop losses even if the markets, resume the recovery phase, because mostly stocks are trading on the record highs. There could be a possibility of consolidation and profit taking in days to come. But comparatively, yes, these are some of the names from the energy basket which look strong to us. So yes, all right, with this, we have answered all the queries. So thank you everyone for joining in. Next week, same time, we will connect again and talk about markets. Till then, take care. Thank you.